Hi everyone and welcome back. We're going to cover my most favorite content within the EXL Cloud content library. There isn't a moment that goes past that someone isn't thinking about cash for a business. And the cash flow scenario model is really great at understanding different scenarios, quickly calculating forward-looking aspects around cash flow quickly and easy. The one-way cash flow model is referencing one financial statement, being the income statement, but on a cash basis. So what this is doing is it's allowing you to quickly look at different scenarios relating to your income statement. We have allowed also some of the scenarios to show impacts on balance sheet items, but it's not a full three-way. So the one-way cash flow model is really useful for you to help your clients understand their impact on their cash flow based on the previous 12 months. We allow you to copy the actuals from the previous 12 months to set a baseline set of forecasts. We then allow you to do some really basic percentage uplifts on revenue or expenses so that you're starting with a position that is really robust. And we give you 3 scenarios and scenario areas to play with. This allows you to really get creative and strategize with a client around their cash flow. Cash flow advisory is one of the areas that is increasingly in demand for clients, and accounting firms and finance professionals are looking to provide better cash flow advisory services, and the one-way cash flow model is great for that. It's really easy, it's in your favorite tool Excel, it allows you to pull information directly out of Xero, and also allows you to play with scenarios really quickly. And the best part of it, there's some really high quality dashboards that come with it. These dashboards are fully customized. You can do whatever you want with them because you are in your favorite tool, Excel. So let's get into it. Again, just similar to other instances, we're going to start with our start menu. And in the bottom left-hand corner, we see models, and we're going to select the one-way cash flow model. We can select either the icon or the words. Either way, we click that and it'll open up our one-way cash flow model. Now, similar to every other workbook that you have in the Excel Cloud library is your master control. Same again, I'm not going to cover all the details of the master control. They're pretty much the same. On the top left-hand side, you have information relating to the time series. You have your list of entities, so we click Get to get those list of entities that we're going to play with. If you do select multiple entities, just recognize you're doing an aggregation. So it's not a consolidation, so there is a risk that you aggregate and gross up revenue line items with expense items. So just be careful how you use this. I suggest you do it on a single entity basis, and if you wanted to use aggregated, then just make sure that you're adjusting accordingly for the line items that don't have an external impact, that are internal within the different organizations. Similar to usual, we're going to select particular entities. Maybe we put a cross here. I'm not going to pull that data for privacy reasons, but what we are going to do is we're going to pull the demo data. So when we pull the demo data, it allows us to pull information both from an historical actual perspective on a cash basis, but also allows us to quickly populate a baseline forecast, a set of scenarios. But we're going to actually wind that back. So I'm going to take you through how to do that. We're going to delete the baseline. We're going to delete the scenarios. We're actually going to save some of the scenarios and allow you to do it. Once completed, it comes to the forecast cash flow output, but we're going to go back to the base case inputs. We're going to clear these inputs just by clicking the clear button. And what we're going to do is we're going to allow us to start from scratch. If you were going to use this workbook, you would pull your information and you wouldn't have any of these base case forecasts or any of the other scenarios there already, because we're using the demo. It's already populated for you, so you can use it straight away, and at least to demonstrate internally or to clients. So if you were using this for a client, you would have no information in your base case. So what we're going to do, we're going to have click this little button which says copy actuals, and this allows us to copy the 12 months of actual data. Now, in some cases that might be useful, but in other cases it might not. So be careful how you copy prior year actuals. But either way, we can come along and we can make some changes. We're in Excel, we can change these to 4,000 or 44,000 as we need. So it allows us to make all these particular changes. So when you're doing that, just make sure you allow enough information to be put into these. In some cases, you might want to apply a percentage uplift on revenue. So let's apply 5%, or we provide a 3% expense uplift, and we apply those uplifts. So if we click OK, and we apply the parameter across all of those baseline numbers. Here you can spend a bit of time in the base case input to work out what is my baseline, what is the base assumptions, what are we confident of. Our scenarios are we're going to do on top of the base. So don't put any extra areas or extra scenarios in the base case. The base case is really just if nothing else changed and you had last year again this year, obviously that's a big assumption in itself. Or you wanted to start with 0 and nothing, you could also do that. You could also clear all the inputs as we did before. But once you've got your base case, we're then going to go on to next. Now the demo data comes already populated with a whole lot of scenarios. Now we don't want to use that. I'm going to explain to you how you're applying this for an actual client. But what I do want to do is I actually want to save these inputs so I can use them later and actually show you how if you're using the scenario model, you can save your assumptions for later. So when you come back, you can either save the workbook as is, or you can actually save the inputs into the worksheet. So I'm going to click Save Inputs. It's going to confirm if I'm sure to do that, and I'm going to say yes. And then I'm going to clear the inputs. So in clearing the inputs, it does also ask me, do I want to clear the saved inputs? Now, of course, I don't want to do that, so I'm going to click No. So it's straight away cleared those inputs, so I can start with a clean set of assumptions around those scenarios. If I wanted to load the ones that I've just saved, of course, there it is, it's loaded. But again, we're going to clear these, we're going to clear the scenarios, but we're not going to clear the saved. And I'm going to show you how you can quickly create a scenario for a particular entity. There are 3 entities within this demo data. So we have our Australian, Singapore, and UK entity. So I'm going to select the Australian. I'm going to select the particular area of the model. So whilst it is a one-way from a P&L perspective and base set of numbers, we are able in the scenario manager to place specific scenarios around current assets, liabilities, long-term liabilities, equity. If you were doing a capital raise, you could put in equity into these numbers as well. So what we're going to do here quickly is just do revenue. As you select the particular account type, it then filters for the next account type in the drop-down. So this is an in-cell data validation drop-down and allows you to select. So we're going to select main income. The behavior I'm going to come back to in a moment, but really let's go with repeat for the moment, and I'll explain when you see the numbers coming in. The start period, we're going to go August 21. So that's the start of the scenario which we're going to play. Here let's say we're going to use 3 months for the scenario, and let's put in $10,000. So straight away we can see 3 months, $10,000 started in August, and I can see my forecast sitting on the right here. If I wanted to change the behavior from a repeat, of course, if we have percentage, we just put in a percentage, and that would be a percentage uplift on the base case. This as well is a repeat of these numbers, but they are added on top of the base case that we just did. If I do spread, what it does is it takes the total amount and spreads it over the number of months. So here you can see 3,333 shown on the right hand side. If I choose start and end, this is really only applicable for where we're having a debt balance. For instance, we're drawing down on debt and then we're paying it later. So if I do start and end, what we can see is we draw down the $10,000, we have it for 3 months, and we pay it back in the 4th month. Be sure how to use this behavior. Of course, the start and end you really would only use when thinking about debt or a loan. Cash flow modeling often relates to where an organization is trying to get some funding to help them. Whether it's short-term working capital cash flow, ultimately, this is where you would apply this behavior. The bullet behavior is really just the amount at the end of the period. So there's a 3-month period, and in the fourth period we have that bullet amount. Similar to where you have a debt balance where you've already drawn down, now you want a positive or negative. We can also make sure have our proper signage correctly. So in this case, if we were repaying debt, we'd go minus 10,000. We would also need to change our chart of account, because remember, we're sitting on revenue. We wouldn't necessarily have zero revenue later on, unless maybe we're thinking about there could be a potential scenario where we have to have a large refund of some revenue, where in that case you could have that situation. But what we're going to do is we're just going to go back to repeat, and what I'm going to show you is how to change this so that we have this across multiple scenarios. So we've got an Australian company. Remember, everything in this model is Aussie dollar equivalent. So even though we're using across multiple entities, in the master control we did select Aussie dollars. We can select another currency, but just be aware that the amount that you're putting in here is related to the currency that we set in the master control. So if we have a look here, the master control currency, target currency is Aussie dollars. So just making sure that we understand that. So back to 3B, our scenario manager, using the hamburger menu. If we want to select UK, let's say in this case we wanted to select an expense. We select the particular expense, maybe subscription expense, and ultimately we're going to select the behavior as well. Maybe in this case we want to choose spread, and we have this expense, maybe this one starting in July. So we're going to select July. It's then going to say run for 12 months. Let's say we have a 12-month subscription. That's going to be $5,000. So because it's an expense, it automatically switches the sign here. So the sign here is obviously relevant to the particular account type that we're using. So if we have a negative revenue, it'll be a negative number. If a positive number, obviously the revenue is positive, cash is positive. Really just thinking about positive and negative from a cash flow perspective. The expense is cash outflow. We have our base case input forecast that we had before. This is our base scenario on top of the base case inputs. Now what we want to do is we don't want to save a bit of time. We don't necessarily want to repeat those two lines, and maybe there's more, but I'm just going to show you how to do two. What we can do is we can now copy the base case. So that allows us to quickly copy that downwards for our best case scenario. So maybe in this case, it's not $10,000, it might be $15,000 in our best case scenario. In the terms of our worst case, if we go down here, maybe we actually have it for only 2 months, and maybe it's only $5,000. In this case, we can quickly and automatically update scenarios on different bases. Most organizations, in fact, most people can't cope with more than 3 scenarios, which is why we give you the 3. If we look at the expenses, on the expense side, maybe we have in the best case scenario, we can negotiate maybe a 3,000 subscription, but the period that we are going to choose in this scenario model is at the moment only for a 12-month period. Just be wary that the forecast model in this is only 12 months forward from actual, so it's a 24-month model. If you wanted to expand beyond 12 months, come talk to us. It's not a huge issue. What we are able to do is roll the model. So your starting point will be updated with actuals, and you'll always have the 12 months looking forward. What we suggest you do is use it for 12 months, roll it forward, and when you're pulling down actuals, you can pull down a new set of 12 months, which is going to be slightly later period. So you're constantly rolling on that 12-month basis. So maybe in this case, it's 3,000. Maybe we can negotiate for a 10-month subscription. Ultimately, these scenarios are really dependent on what decisions you're making and what your client's making relating to these particular scenarios. If we have a worst case scenario, maybe the subscription is going to be $8,000 because we don't have the ability to negotiate some of that. So once you've done all of those scenarios, we can click the next button on the right hand side, and we can see the opening and closing and the cash movement under each of these scenarios. We have our base, we have our best, and as we're doing that, we can see those numbers changing, and then we have our worst. So if we look at the end point of some of these results, we can start to see the closing cash. So in our best case scenario, 768, base case 768, best is 783, and worst case is 747. So 747 against a 768. So really quickly we can see how we've applied those various scenarios to the assumptions. But this is obviously on a table basis. If we wanted to look at in a dashboard, this is a great dashboard. We can look at base, best, and worst, and all of these are dynamic. We can look at particular organizations, so we can look at the Aussie entity where we've applied some of those assumptions and some of those variations, and we can click through them. We can see all those numbers changing on the right. Now, we didn't change any of the Singapore entity numbers, so if we do base, best, and worst, obviously we're not going to see any changes in any of those dashboards because we didn't put any scenarios for Singapore. If we had to choose the UK, we will see some of those changes: base, best, and worst. When looking at some of these other scenario comparisons, we can also look at the scenarios side by side. So the previous dashboard allowed us to look at the entire entity, but now we actually look at a scenario comparison. So we can compare each of those scenarios on a revenue basis. So if we look at the entire company, we can see all of these reflected here. We also need to make sure we select the correct period. So for the July month or for October, we actually have more variability in some of the scenarios. For November, we can see that there's some variability in the expenses, but the revenue is all the same. Just be wary of which period you're selecting when you're comparing some of those scenarios. On the left-hand side, you have a table comparing those different scenarios. This is why I love this workbook and this model, because it really allows us to have a quick view as to various scenarios relating to cash flow for the particular entity. We have the scenario dashboard. We can actually look at some key metrics and make some changes here. If we look at the July, or we look at August is probably a better one to look at. And we can look at all of that across broader information sets: revenue, direct costs, overheads, margins as well, and valuation. We have an enterprise valuation. We have on EBIT and a revenue basis. In our scenario manager, we also allow you to change some of the valuation metrics. So if we go back to our scenario manager at the bottom, we have enterprise value on a revenue multiple basis or on an EBIT basis. So we didn't change any of those. We just kept them at 1 times. You can definitely change each of those, and that will flow through to the various scenarios in the dashboard. So that's the scenario dashboard. So overall, now you can see why I absolutely love the one-way scenario cash flow model. It's super easy to use, it's super powerful, and really enables you to do some really amazing things with it. One of the big benefits is that in literally the time that I've been talking, you have a cash flow model that you can take to a client and have a great conversation. At the very least, you can explore some various scenarios with them to uncover where you might need to go deeper. I hope this has been really useful and powerful, and stay tuned for this and more. Keep Excel and leverage the cloud. Thank you.